Hey, this is Awais with EminiPlayer.net, and this is a recap for Thursday, April 24th. So in the overnight session, we knew that buyers had maintained control and hit that 82 area, which was one of our upside objectives. But now heading into the open, we wanted to see TF trading above 1155. That was a potential red flag for buyers. And on NQ, we wanted to see it trading above 3612 to 3615 in order to get upside continuation in the S&P. And the plan mentioned that if we start seeing weakness in other markets, then we could get a deeper pullback in ES as well. We were using the 68 quarter to 70 quarter as the bull bear zone and initial support, and a break below that would bring 64 half and the 61 to 63 support zone into play. And of course, it would have potential to shift the control from the buyers to the sellers, depending on where price was trading. If it holds below the bull bear zone, then sellers can maintain control. So that being said, let's jump into the charts, see how the day played out. So you can see that right off the open, we pretty much get an open drive lower. The problem with this was that it was a bit tough to get on board the open drive. Because we balanced here for a little bit, and because we were opening on a decent gap higher, and the internals weren't necessarily showing a whole lot of weakness right off the open. They started getting weak as price started heading lower. But because we had some support right below here, and overall in the overnight session, buyers had maintained control. It was a bit difficult to get on board. If you were able to get on board short right from the open drive or the break below the opening range, then that's ideal. As soon as we started breaking below 77, 76, I was trying to find a spot to get short on a very small pullback. Right? Not like, a huge pullback, just 2 or 3 points, 2 points, something like that. But, you can see that once that liquidation started, it really didn't give any opportunity to get on board right off, the actual opening range break. So we had lower, we balanced here in a very tight range and then just start heading lower, and it never really put in that, counter trend rotation that would allow me to get on board with a, modest stop size and good reward to risk. So, this setup off the open on the short side, I missed it, but the focus was on the short side. So, we definitely didn't want to buy the initial support or bull bear zone. This is a clear open drive lower. The other markets are breaking lower. TF, failed to get to 1155 overnight. That was a red flag. And then it starts breaking on pretty heavy momentum and volume. That's not a type of price action that I want to fade. I don't want to step in front of that, right? I want to get on board. It's just a matter of where I can get on board. So the first spot that, I saw a setup on the short side where, it was a modest stop size, roughly, I think, 3.5 points. It had to be a little bit wider than normal to account for the volatility. And because, when you have directional conviction, you could go pop a little bit back up towards the VWAP, and I wanted my stop to be, around the VWAP midpoint so that there's enough room for the trade to work out. But, the first short setup, in any case, was back up here on this rotation back up towards 70. So, as we break the bull bear zone, then bounce back up, this was the first decent retracement after this, very strong sell-off, right? And usually this is not the low, right? So usually when you get this type of price action where it's just a all-out liquidation, the market is not just going to make a V reversal and just turn back around. That really only happens when the context is very bullish and you're coming into some really solid support. At this point, I didn't expect this zone to hold as it was coming down. So as soon as it bounced back up, towards the top of the bull bear zone, 69.5 to 70, that's a good spot to enter short and look for a move lower to the 64.5 HVN and open gap, right? So the setup is short right over here, and then you're holding it at least down to the 64.5 gap, which gives you roughly 5 to 6 points on that trade. And personally, I thought we could go even lower and test 61 to 63, but this is a good spot to at least take a scale out. And the other reason you want to take a scale out is that the internals are not really confirming the strong liquidation move that we're getting in the market, right? And that was always, a red flag, pretty much all morning for me. And we'll talk about how I dealt with that in a minute here. But that was a red flag right from the get-go that the internals weren't really showing a lot of downside pressure. We weren't getting this broad market sell-off where it was going to develop into a trend day. But I thought we could get not really a trend day, but just a trend morning or a directional morning down to 61, 63, and potentially even a little bit lower. But that was really the main target for me, was from like 70 all the way down to that 63 naked VPOC. So again, depending on where you're getting in, roughly 6 to 7 points. If you're using a 3.5 point stop, that still gives you 2R on a very high conviction and high probability setup. But as we come down here, you can see that we're doing it on a positive tick divergence, right? And we're not seeing any really heavy tick readings. I mean, this first one, we get about minus 800, but then we rotate higher. That's where I entered short. And then on this pullback here, you get a positive divergence here. We got a positive divergence on the S&P advanced decline, which was basically, the reading was around minus 100, which is very much indicative of more of a balanced type session. So that was a red flag. But, like I've covered in prior videos, when there's a conflict between the internals and the price action, I will give more weight to the price action, right? Because there's that possibility that the internals can eventually catch up to price. Now, typically they will come back in sync. Either price will revert and get, in line with the internals, or the internals will catch up to the price. When this type of scenario happens and you have this strong liquidation move, my personal preference is to weigh the price action more and, then watch the internals and see whether they start catching up or not, right? And then if they don't start catching up, then that's a red flag and you can adjust your position accordingly. But, you want to give price at least a chance to, work out. You want to take the pattern based on the price action alone and then see if the internals start, catching up. So, this is a setup where you scale out. Now, once you start going back up towards, the 70, 71 area, there's still potential that the sellers can still enter, but now we're seeing more signs that this is not really developing into a trend down morning or a liquidation day, right? So if we scroll forward, we can see that, now as ES is balancing up in this range, the AD line is back hovering around 0. We're actually, we put on a new tick high over here. And after that, we're spending more time above 0, right? So right away, we know that, the market is lacking that big downside momentum that we want to see. But on directional days, the 24-hour VWAP and midpoint are very key levels. On balanced sessions, the VWAP is more or less irrelevant because price will rotate around it, so it's not really an inflection point. But when you're putting on, a directional day, or you would think that the market is establishing a directional day, then that VWAP is very important. And this was a directional morning. So until we reversed up here, it was a directional morning. So once we got up to the 72 VWAP and 72 half area, that was yet another short setup, right? Because there was still that potential that if this move is going to go directional, if the day is going to go directional, then this is the spot that it can go from, right? At this point, the odds were questionable because of the way the tick was behaving, and because the internals were not really showing the the level of selling and the level of weakness that would typically be present in the market in a liquidation scenario. We weren't seeing that, but that scenario was still possible. So this is a trade where you're shorting 72. That's what I did, and you're looking for a move below the bull bear zone, and this is really the inflection point, right? I mean, that's how we're using the bull bear zone. If we're trading above it, then you got to be careful on the short side, and buyers can be in control. If you're trading below it, then sellers are in control, right? So at this point, you had broken back above the bull bear zone. I'm shorting VWAP, looking for an extension lower, right? And looking for the internals to actually start making new lows and catch up to the price action. But we can see that we come down towards 68 quarter, 68 half, and then actually just bounce right from there. And that was a signal that this is not playing out the way that I expected. And in this case, if it's coming down to bull bear zone, it's not a bad idea to take a scale out over there as well. That is the short-term inflection point. I personally was not looking to scale out of the trade, because you want to capture the high reward to risk if the trade does work out. But at the same time, because of the way the internals were behaving and the way tick was behaving, right? You can see that we don't even get to minus 600 on this little rotation down here. At the same time, you don't want to be stubborn and stick with the same idea, right? When the markets are volatile, you need to be even more flexible because price can balance in just a wider range, especially if the internals aren't showing that weakness that you really want. So, I didn't take advantage of the long side because I was positioned short, but at the same time, I didn't take any loss on the short side either. I took advantage of a good sequence over here early in the morning, and then positioned myself for a bigger trade over here. That didn't work out. Bull bear zone held, and we ended up getting a pretty nice upside move up towards the overnight low. The next setup is short again at the overnight low, 77. So that's basically broken support acting as resistance. It's a retest of the morning liquidation, the morning breakdown. And, given the morning weakness and given the fact that even though internals are positive, they're not extremely strong, right? I mean, this is the NYSE advanced decline and you're running at about 5 or 600, plus 5 or 600 reading over here. So, given the weakness in this market, given the weakness in the other markets, because TF put in a pretty major breakdown and then reversed, it was unlikely that ES would, go back up to the overnight high, right? Especially over lunch. So, this is a potential short setup over here. This is another setup that I did take. And, you're looking for, on this one, you're looking for a pullback towards 70 to 73, which is the midpoint on the day, and, the VPOC on the day as well at 70, 75. I think at the time it was right around 70, 70 quarter, something like that. So you're looking for a pullback towards the 70 area and 73 from 77. So there is, 4 to 7 point potential from that zone. And, just took a while for that idea to play out. But eventually, ES did make it back to the bull bear zone. Now, once you're trading over here, the question is what's more likely to happen, right? At this point, are buyers still going to maintain control? Or, is the market going to now break lower and, head lower down to, the first hour low and the 61, 63 area? So once it gets to the bull bear zone, if you look at the internals, you can see that we're not really showing much weakness down here, right? I mean, we're seeing what, minus 1 or 200 on the NYSE advanced decline, which is very neutral. That's very indicative of a market that's still stuck in balance. So taking that idea that the market is, the internals are showing us a very neutral picture, and the fact that, we've already put in a new tick low over here, and then as we move lower into the bull bear zone, we're getting actually less momentum on the downside, right? And not only are we getting less momentum, but we, on this little bounce over here, we get a plus 600 tick reading. These are not signs that accompany a liquidation move. Usually when you're, in a liquidation type scenario, tick is holding below zero, internals are just, getting hammered and moving lower. So at this point, if you short it up here, then you certainly want to cover that position, right? Get out of your short setup. But at the same time, this is a potential long setup as well. And, this isn't a huge trade. This is not an idea where I'm thinking it's going to go back up to the highs, but a retest of this little balance that we developed in, the lunch hour is very possible, right? So right over here, the 74 to 76 area becomes an upside target off of the bull bear zone. And, at that point, we had the value area low at 68.5. So you have some confluence of support, right? You have the intraday value area low, you have the bull bear zone. This is a spot where you got a lot of upside conviction early in the morning. So it's pretty likely that it's going to be defended first time down. After you've balanced up here, now you head lower. It's a very key spot. It's an important inflection point, bigger picture even. It's the bull bear zone. And, And the internals are not showing you that this is a market that is going to break lower. So the final setup on the day is actually a long right around 69, 69.5, and you're targeting a move back up to 74. And the idea is that you want to get long the market, as close to the value area low as possible, right? So I had a resting order at 68.5 to enter long, but once we came down here and we actually bounced back up, and I saw that the tick actually bounced up to plus 600. Then on the next pullback, I still have that resting order, but I'm not sure if it's going to get hit, at this point. So in that case, you don't want to necessarily just wait. If there's good reward to risk, then getting in even at 69.5 is not a bad idea. And the trade idea is basically 69.5, a 2-point stop, 2.5-point stop, something like that, and you're targeting a move back up towards 74 to 75. Now, because we balanced here for so long, and there wasn't a lot of conviction on the upside, I think it's not a bad idea to take a scale out at 73, on this move up here, and then see if you can get a little bit more out of the trade. And once the market starts showing you some weakness and not really following through, and you have earnings out after the close, then it's a good idea just to have a resting order at 73, 75, or 74, and then just on the next swing up, just exit the position. So I mean, you can see that eventually, after earnings, after the close, it made it up to this 74 to 76 area, and kind of tried to break through it a little bit, and you would have been filled even if you had an order at 75, but it's not really worth it to hold the risk just for one more point, especially when there's not a lot of conviction in the idea anymore. And because we were balancing it for so long and having a real tough time moving higher, I personally didn't really have a lot of conviction that it was going to actually reach 75. So in that scenario, when you don't have a lot of conviction in the trade idea, it's not a bad idea to take a scale out, right? You don't want to make it automatic where you're taking it with every single trade. I think that will dilute your edge, and you're going to miss out on a lot of potential big winners where you can hold your entire position a target. But when it's a setup where your conviction is not quite there and the market is kind of just stuck in a range, and there's not too much more left in the trade anyway, I think in those scenarios, it's a good idea to take a scale out because it allows you to hold the other half for potentially a few more points. Whereas if you're holding the whole position and you're kind of chopping in a range, if it comes back down to your entry price, it can be tough to hold on to the entire position in this type of environment where it's very choppy and balanced and pre-earnings. So that was the last trade idea on the day, was about 69.5 up to 74, and that was basically the day. So, pretty volatile session. I think, the important takeaways were the observations on the internals and how price reacted based on the internals, and the fact that, once you took out the VWAP and you held the bull bear zone, at that point, that was a confirmation that buyers were still in control and you could, consider buying this pullback. So it turned out to be a very balanced session. Balanced within the first hour range. That's a pretty low odds scenario. Usually you will break the first hour range, but because it was such a wide range, we ended up just balancing within it. And once we got back above the bull bear zone, then it was just even more chop and more balance. So at this point, this bull bear zone is going to continue to be key. And whether we're able to hold above it in the overnight session is really going to be the key takeaway heading into tomorrow. So for now, keep an eye on like 68.75 to 70.75, right? You have the day's VPOC right there, and as long as we hold above it, buyers can still have a chance at moving higher, but we do want to see those other markets catching up, because for now, TF completely broke below the prior 2 days range. It basically ended up being like a failed breakout to the upside, and right now, if that weakness continues in the Russell and NQ, then today could have been just a kind of a start of a bigger directional move lower in the S&P. So we'll keep an eye on the 68.75, 70.75. If this zone gives out in the overnight session, then we're probably going to be testing 61 to 63, and the 56.5 to 57.5 support zone, then those would be the main support areas that would be in play as downside objectives. But for now, the focus is really going to be where ES is trading in relation to the bull bear zone. So let's keep an eye on that, and I will update you in the morning.